Hello, everybody. Welcome to the show. This is Trading with Livevol. My name is Stephen Choi, and this is where I trade my Reg T account um, using LVX. So today, again, nothing much happened to the stock market. SPX kind of moved within, I'll say, like around the high of 218. Let's see, 213 and 203. Yeah, so basically about a 10-point move in the SPX today. Pretty much been kind of how it's been for the month of February, except for the very beginning. And it's just generally on a slow grind. There was a couple of things that I thought might be of interest. The general market. So today you can see that it tried to sell off a little bit, but then it was bought back up. Same thing with the VIX. It was kind of going up and then it sold off again. If I look at the hourly chart, as you can see, tomorrow will be interesting to see whether it actually, if this is like an uptrend or if this is just part of this downtrend. So you can kind of see how it's kind of moving down, and then it's making lower highs and lower lows, right? Or is it actually going to buck the trend and start going up? If you look at the SPX, it's the same thing. Basically, right now it's at the lower Bollinger Band, and then you might have this uptick. Today, I think the biggest news, in my opinion, even though they were talking about all these the internet and what the ruling was going to be on that's more like long term. I thought the dollar had a pretty good update today. As you guys know, I am long the dollar, but I did it in the UUP, which is an ETF. So I don't have options on these. I just have 200 shares right here. But I was thinking about maybe possibly buying some, like these Januaries. I was thinking maybe these January 24s might be pretty good to buy, because essentially right now I have 200 shares, right? I'm tying up about $5,000. If UUP, let's say, goes up another couple of bucks, which would be still pretty substantial move, right? So here, it's in the last 6 months that this tremendous move. I doubt that we're going to have this kind of move in the next 6 months. It's going to be probably less, if anything. There are still some people who believe that the dollar might go down, but I think for most of the people, the consensus is it's going to get stronger due to the fact that U.S. government is pretty much the only government in the world that's actually thinking about raising interest rates. Every other country in the world is thinking of lowering interest rates or figuring out how to print more cash and devalue their currency. So this isn't just United States. And then there's a bunch of other countries too trying to raise interest rate. US is actually the only one, in my opinion. The QE in Europe hasn't even started. It's going to most likely start in March. Most likely countries like Canada, countries like Australia, China are going to do more monetary policies that's going to pretty much weaken their currency. So in general, I've been kind of thinking for this whole year, this trend will continue. Maybe not in this format, but it'll continue going up like this, right? So until now, I've been long the 200 shares, but if this thing goes up another $2, right? So from 25 to 27, which will be pretty decent move still, right? I'm gonna make $200 two times, 200 times, so $400 total, right? Because I'm long 200 shares, or I can start to buy these. So I'm tying up 5,000 here, but maybe what I can do is instead of doing that, I can buy some of these, right? I can buy some of these. I can probably buy 35. Let's see, 30 and yeah, probably about 35 contracts. Maybe 33, something like that, right around here for the 24 strike. And basically, I have a year for this to go up. So if it does go up to 27, these will turn into $3. So I'll double my money. So I can invest 5,000 and I'll get 5,000 back. And that's kind of what I'm thinking of doing, right? So I'm going to buy the Jan 24 calls. I'm thinking that UUP is going to go up maybe $2 more till end of January, and I will double my money if I did. If you guys, and that's if you were aggressive, right? But let's say you want to be a little safer, you can do a call spread where you buy the 24s, and let's say you don't think it's going to go higher than 27. And if it does go higher, you don't mind giving it up. You can pay 123 and you can make 177, which is 133%. So instead of 100%, you make 133%. Or if you just want to write it naked, you can write it naked. The good thing about writing naked is you can sell them out, right? So if you feel like, it's not going to be like it's not going to be a smooth line. You're going to have these ups and downs. So let's say like at some point you're going to have this where it actually goes way beyond the Bollinger Band, and you might want to sell half of it. If you're just long the calls, you can do that, sell half and then buy the other half back when it drops. You can't really do that when you're doing a spread. It's a lot more difficult. But my general feeling is that the UUP is going to keep going up for the US dollar, which is USD. So this is the US dollar index. You can see it's very similar to the UUP chart. Basically, it's hitting a high again. If you look at monthly, basically it's been on a very steep incline. So maybe it might actually hang out here for a little bit, and it might, it might go higher. But as you can see, if you look at previously where we've been to, which was 120, it still has a lot to go. So even though we had this huge move from 80 to 95, we theoretically could have a bigger move left going forward, which, I'm not saying it's going to happen within this year, but as you can see, it's not like we've hit an all-time high in the US dollar, and all the governments around the world looks like they're in opposite policy of US, where US is tightening and the rest of the world is basically going to have a looser monetary policy, and Europe is going to start the QE program in March. So I think the euro is going to weaken going forward, which is good for the exports, bad for our exports. But in terms of the dollar, it's very good. So what's UUP? So UUP, if you read it here, basically it's the dollar against a basket of 6 major currencies: the euro, the Japanese yen, the British pound, Canadian dollar, Swedish krona, and the Swiss franc. So basically, that's what it goes up against. As you can see, in the past month or so, it's pretty much stalled, which might be one of the reasons why the oil has basically the downturn has been has stabilized. if you look at oil in the last, the same time period, basically it's had more stability, right? So today, as the dollar spiked, you can see the oil price had a pretty good downward movement. And I think in terms of, I know what's the, let's see. Yeah, so, you know, in the headlines, it says U.S. oil skids 4% on concerns over supply glut, which is true, but they could easily have said like, hey, look, the dollar just had a huge spike, right? If you look at CNBC, yeah, so you can see that it's down to 112. It wasn't long ago. It was like 114, and you can see the U.S. versus the Japanese yen is it surpassed 120 for a while, but it settled back down to 120. So all this, you know, movement could be a bigger factor in the oil prices coming down than actually the supply. The supply story, in my opinion, I think there is another downside move left. And the reason I think so is as long as they keep building inventory, they're going to eventually start running out of space to keep the oil. And I think that might spook the oil market. But it's not a firm theory. I just think like there might be one more big move down just because in the past, basically you might have one of these candlesticks, you know, like a hammer kind of candlestick to kind of mark the bottom. And currently we don't have that yet. Not that we have to have it, but my thinking is that we're going to have one more sharp sell-off in oil. So that's about it. I want to talk to you guys about UUP because you know, I think we have upside left, and I want to figure out a way to trade it for the rest of the year. So this is like similar to the dividend plays that I talked about in the previous shows. In terms of the length of time. So if you're looking at it, I'm going out all the way to January. So it's not something I'm going to tinker with for every day. I'm just going to buy it and leave it and then maybe trade around the Bollinger Bands if I get the opportunity, or I just leave it as is. And my thinking is I would like to double it or even make more than double if I decide to sell the 27 calls against it, right? And as long as you're in the belief that the US dollar, even though it might fluctuate, has a long-term upwards movement bias for the rest of the year, this would be a good trade to put on. So I hope you guys had a good day. I'll talk to you guys tomorrow. Good trading. Take care.